Welcome back. Let's get some analysis going on all the stocks that we discussed earlier. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning, and hoping for a better trading session in comparison to what we've seen in the past. Let's talk about start off by HUL. The commentary was a little bit subdued. They're doing some inorganic growth, and the stock has been a big underperformer, down 20% from the recent peak. Your view on HUL?
Yeah, good morning, and thank you for having me on your show. No, I think these are very challenging times for the traditional FMCG companies. And they are one of the points who are not being discussed is that the growing power of the quick commerce and the modern trade and its impact on FMCG as well. See, companies like Hindustan Unilever, Nestle, they had the advantage of a very large distribution network. But Kirana stores are closing left, right, and center, and a lot of businesses going to very solid quick commerce or modern trade companies which have got higher bargaining power. And long term, I think that's not a good trend for FMCG companies. In any case, I think it's very clear that a lot of the categories they're operating are very, very mature. And these kind of slowdowns certainly take the growth rates even lower. Even at these levels, it is worth selling off HUL and the other similar FMCG companies to go to maybe some other growth companies or maybe some other growth industries as well.
No, I mean, absolutely. I was wondering actually when we were talking about the results, etc. I've looked at HUL whenever the numbers come out, not so much for what the stock will do, but just as a commentary on the overall sort of more macro-ish rather than micro-ish as you know what to do with the stock, etc. Just, I mean, of course, very, very large business, and sometimes it acts against it, right? In terms of how fast it can move, and so much is giant, really. But markets have had it tough, Dipan. But although there's always going to be pickings, stock-specific activity, action. What have you done lately? Anything you've liked, fallen enough, good moat?
No, Prashant. We are trying to see how we can still raise cash levels. And I think that companies which have got trading at very high P multiples, and a few of them are in our portfolio as well, and numbers are disappointing. Clearly scratching ahead whether we should exit those stocks, and this could be multi-year holdings, but a lot of thought process is required over there. Just to name a few, very disappointed with Tata Elxsi numbers. Even management commentary was pretty, I would say, subdued from our perspective. Another company, Supreme Industries, I think very, very disappointing set of numbers. Although management is very optimistic for Q4, but last 2-3 quarters have been very disappointing. So like that, I think we are evaluating companies where P multiples are high within our portfolio and the numbers have disappointed. So we need to take action. Really, that's a lot of thought process goes over there. But I'm really not looking at making any fresh investment. And I'm sure stock prices have corrected significantly. But I think what was super expensive has now become expensive. It's not in the zone of where it is reasonably valued also.
Although, that's the thing, right? We've had this very high P multiples for over a decade, right? I mean, it's not maybe super high recently, but high for a long, long time. So yeah. Very hard to say what is. But do you think the market style has changed, definitely changed? I mean, from rewarding, very high P stocks, you're now in a phase where that perhaps won't work. And you need to change, if you're able to, you got to change with the market in that sense, Dipan.
Yeah, of course. I think you have to evolve with the market. I mean, and I saw your take on the channel's take on BPCL, and I was wondering, should I buy BPCL? I've never bought it my whole life. I mean, because clearly I think there is value in buying low PE stocks. Even a marginal, upgrade in the PE multiple can make a big difference to the earnings and between the price and the returns. And even if the earnings start to move up, then stock price can move in line with the earnings. So I think some amount of rethink is definitely required, especially investors who were chasing growth at any PE multiple. I think this particular earnings season and the last one and the way stock prices are moved is really quite an awakening that you cannot just buy anything at any PE multiple. The momentum will take you only so much higher. But then when reality sets in, then you are seeing a correction, steep correction, 30-40% or thereabout as well.
Dipan, any thoughts, any take here?
I thought we lived in interesting times, but I think we're living in even more interesting times, But, end of the day, Prashant, all this is just noise. And, this is a great time to, again, focus back on how we can churn the portfolio to improve the quality. There could be a few opportunities as well on the buy side, on the sell side. We have a nice earnings season in place and a lot of intraday volatility is there. So I think from an investor's perspective, all this Trump and is just pure noise, and it should not shift away from the focus of business of investing and trying to find good quality stocks at reasonable valuations wherever they are available and whenever they are available.
Okay, all right. Thanks a lot, Dipan, for joining in and helping us out with your comment on all those stocks. Let's